The federal government posted a deficit of almost $40 billion in its most recent budget. One of the ways the government plans to raise more money is through the capital gains tax. But what will that do, given that Canada has what some are already calling a productivity emergency? Renaud Brossard is with the Montreal Economic Institute. Hi, Renaud. Thank you very much for joining us tonight.
Well, thanks for having me.
So, Renaud, what does it mean to have a productivity emergency? What is it? What are the implications for the economy?
What it means is that the value produced for every hour we work has been going down. Actually, it's been going down back to 2016 levels when we adjust for inflation. And of course, if we produce less value for every hour we work, our wages are affected and our standards of living are affected.
Now, Ottawa has decided to deal with its growing deficit by increasing the capital gains tax to raise government revenues. And you say this is going to exacerbate this productivity problem. Why would that do that?
Most certainly will. The reason why we've got this productivity problem is not because Canadians don't work hard enough, we do, but rather because the tools that we use for doing this work are not optimal. So what we need is more investment, more private, non-residential investment. And so far, we've been having trouble attracting it. We're lagging at about $17,000 per worker per year in Canada versus the US. Our neighbors to the south are at $27,000 per worker per year. So this means that there's a widening gap as the US gets more and more investment every year in that field. So of course, if you need more investment, if you want to attract more investment, increasing taxes on those very investments is about the worst way to go at it.
Now, Ottawa is saying that the capital gains tax will affect only what the government is calling the ultra-rich, so that the vast majority of people won't be affected. Do you agree with that?
Absolutely not. A lot of people that have large capital gains on the tax reform have it for once in their life. These are small business owners that are selling their business at the end of their career and retiring. Well, for that 1 year, they have a significant gain. It doesn't mean that they earned millions throughout their lives either. It's also doctors that are closing down their practice. And it's, of course, small real estate investors, people that worked hard, saved money, bought a duplex a few decades back, and that were sort of counting on that duplex for their retirement to provide them with the funds they need for their retirement. Well, these are all people that are going to be paying much more taxes when they actually realize those capital gains because of this latest tax increase. So it's very much a tax hike on a lot more Canadians. And then, of course, there's all the people that are indirectly affected through this productivity issue.
So along with the growing deficits, we also have the growing debts. The federal debt now is at $1.3 trillion. What does that mean for a country that has a high debt load like this?
It means we owe a lot of money and that we just don't have as much of a margin for action for new programs. So when we look at the federal budget this year, this government has announced a lot of new programs. We're still in a $40 billion deficit, but we're also spending much more on interest payments than we were in the past. This government banked on the idea that interest rates were going to stay low forever. I think everybody that has a mortgage has realized that this wasn't the case. And now this year, Canadians are going to be paying $54 billion in debt interest payments at the federal level alone. Now, for comparison, that's about as much money as we get through the GST. If you look at all the sales taxes you're going to pay for this year, it's going to be barely enough to cover our interest on our debt, and is not going to help cover the many different services that Canadians rely on.
And you have an interesting little factoid, how quickly this debt is rising, right? Just by the day and the hour.
I mean, look, this interview is about 5 minutes long. The debt is going up by $85,000 a minute. So by the time we're done talking here, there's going to be nearly $500,000 extra on this huge debt tab that we're leaving for future generations. So that is, quite a lot of money that we're leaving for future generations to pay for.
Wow. Would also be a very expensive interview. Okay. Okay. And thank you very much for joining us today, Renaud.
Well, thanks so much for having me.